Good morning, good afternoon, and good evening, wherever you are joining me at this hour. Welcome to 241 edition of Investdata Trading Academy live with Ambrose. I will say that the markets are the global scene as we speak now remain mixed, but the good thing that we are seeing that the positive trend, sentiment or trend we saw yesterday in most of this market has sustained this morning, and which is a good start for the market. Despite that the US market is still very mixed, I can say that the European stock market are looking up this morning, and this is the news in the market. And as a result of what, saying that the energy stocks and banking stocks, those great investors are looking at this industry, and we are seeing that the price of those stocks they are rebounding, and it's as a result of the as a result of the regulators and the central banks also taking the right step to make sure that they intervene in this banks that were also shaking, confident all this while. I told you yesterday that almost from the beginning of this month, there's one reason or the other that the market continued to oscillate. That's why I said that the oscillation or the volatility we have seen in this market this month of March has been something else. I would say I put it an extreme volatility, even higher than what we saw in the in the period of COVID-19, which I also said yesterday. But the good thing that this morning we are seeing that confidence are coming back gradually to show that there is no cause for alarm for investors in this matured market. But the good thing is that as investor, like I always say, any season for Q1 is around the corner, and in those matured economy market, they are also gradually seeing those numbers. But here, our eyes is still on the full year earnings. Also, many companies on the exchange also have something to notify the market forward, the close period forward for Q1 again. You can see that the earnings season will extend into what? Into the month of April, and that is the beauty of investors looking at what is going to sustain the market locally here. But on the foreign scene, as I was saying, the market has shown a good start of this morning, which is good. But here in Nigeria or NGS, we are seeing that NGS is still oscillating, marginally up, marginally down this morning after a huge pullback we saw yesterday as a result of what high price stocks suffered losses yesterday, especially Airtel and the life of Steplat and MTN. MTN we saw the observation yesterday, but this morning MTN has gradually also been adjusted down for what for dividend of 10 naira. You can see that that is why the market is in this dimension. But the good thing that we come to the market proper, but as we are looking at what is happening in the foreign market, these are things that we are looking at to build up where we are going. The confidence we are seeing coming back gradually is that the regulators in this economy have given a clear direction where the bank stand. That what we saw in this period is far different from what happened in 2008. That the regulators say banks are more solid now, and the incident that happened then was different. And also, the regulators say they are also ready, to bail out any banks. But as they speak, that most of these banks, and especially consider that the price of USBS has also rebounded after fear of liquidity, the previous week. These are the things that investors are looking at. If gradually these things are being solved and also trying to regain investors' confidence, for me, it's a good one. That's why I said what is happening in this bank, this domain, are different from what is happening in other sectors. Like I said earlier, that in those domains, we are seeing different specialized banks having issues. Also, there are some banks that also they are specialized in energy. And you know what is happening in the energy industry. That also has supported those banks as we speak now because their earnings are looking good. Also, in different domains, the rate hike that we have seen so far, in this the season, especially from last year, where this Ukraine and Russia thing started, most of the banks that also have made effective use of this rate hike, their earnings are becoming better, and that is why I said most of the central banks said what we saw is a different ball game from what happened in 2008. It tells you that for me, this also give the investors a kind of relaxed mind that yes, no bank can say it's moved from collapse, but if the regulators are seeing why it happened, and also like also we're hearing that the collapse of or the isn't that happening in the Silicon Valley Bank was as a result of what there is a management issue. That means that is why when I said one of the TV program that investors in these banks, like we're here in Nigeria, we should be more interested in our banks where we are invested, on the company where we are invested, because it's your money that we invested that you need to know how they're running. Not just you just come to AGM and be praising your shareholders. No, it is time for you to sit up and understand their business so that you can ask intelligent question and quality relationship between the shareholders and the what and their management. You can easily print out some loopholes early before the regulator, and things will sort out before it becomes something. I think this is an eye opener for what has happened in this bank recently. So that we also investors should also look at that angle. And also, if you look at this confidence coming back because of banks are putting in order, for me, it's a good one. And as I said, different domains are also having different incidents with their banks. Some banks in different are having a better earnings, better capital adequacy, a better world liquidity, higher one than they ever have since. Just to show you that those economy is looking good. For me, there's no cause for alarm. Like here, down here in Nigeria, we have said it earlier, and which the regulators also have come out to say that there's no cause for alarm. Yes, there might be delay, in the result, which has also put the market where the market is now, in a just in a dire situation, because earnings have been delayed, even not from only the banks. The other companies in the market also have delayed their earnings. They are just trickling down gradually to the market. By now, before now, in previous years, we have seen nearly 70% of the earnings. As we speak now, as he said that earnings are it's less than 20 companies that release earnings as we speak now. Altogether, the early filers and the ones that are gradually, they are not 20. It tells you that we need these earnings to come to the market or to shape the market and give market direction as we speak down here in Nigeria. But in that mature economy, as we speak now, European market are in green. I can tell you that all the stocks are looking up. Also in Asia, because of the Turkey trying to suspend export now from the Mediterranean Sea. You can see that the price of crude oil has also done. When you see crude oil price jumping, rebounding from almost 15 months low to where it is now around 78.17, it tells you that these are what is driving those markets too. And also confident that these banks have been intervening on time, and we're seeing kind of activities moving. This also supported the banks, the Asia's index. As we speak now, Asia index are mixed, but we're seeing more green in that environment, in that zone. Also, like I told you earlier, but US market is still mixed. Most of the US index are still red this morning, but at this hour, believe that before the market close, we might see also an improvement in that regard. But I tell you that market has opened on a brighter note this morning across the globe. But here in Nigeria, despite the market saw a sharp pullback this morning, market is trying to find a level, but still those which decline we saw yesterday is not reflecting now in the market. You see market in the green, in the red, 1 point something down, 1 point something basic point down, up again. Market has not taken direction as we speak now, just in the mode of that as we saw yesterday. But the good news that I'll tell you as the end of the quarter is drawing closer. Don't forget that what we call end of the quarter when investing will also come in place. Not only in Nigeria, in the market market, but this is a new financial year. I need to prepare your account to start the year. And this is the first quarter of the year. And that's why all eyes on the years. Like I said earlier, in the market, you might see that our Q1 number might not be too attractive. But that should not send any panic word to investors or traders. But the good thing is here for down here in Nigeria, let's take the market. I believe that what we saw yesterday is also a good sign for us that are traders as market trend to correct. But we want to also look at what is the factors that make up this pullback. Is it going to reflect in more, in many of the stocks so they become cheap for us to buy, or is just those few stocks that have that high cap price that have just suffered losses as a result of either markdown or profit taking? That is going to don't just because market pullback you stop panicking. No, let's just say knowledge is key, and when you are investing in knowledge, I think your mistakes are bound to work to reduce or really eradicate. And that's why you are learning, because education in equity investing has no graduation date. Because the more you learn, the more you better your return, the more also you advance your knowledge. And when you are investing in confidence, I'll tell you, when you take position, you know why you are there, and that's confidence where people to also guide what to protect your capital. Down here, if you look at our market here, NGS, the current market pullback for me on NGS is so important that that we should instead of panicking, it's a time for us to read the internal market dynamics of highly priced stocks, impact on NGS, index. That is what that the different we're seeing that in general market performance or trend tells you that This index has, which I know most of you know, has a lot of impact on what because of what the what they kind of their weight attached to them, especially the life of Etse, Dangote, um, Boa Cement, and the MTN. These are the ones that I know that they control most more than even 60% of the market, 10%. And whenever these stocks pull back or go up, it reflects on. That's why you as a trader want to look at the what is the internal market dynamics that is happening. That's why looking at your individual index is very important. Despite that yesterday we saw that all the five indexes were in red yesterday, but he said that there are some just had a marginal decline, some has a big one. But you need to understand what is happening because are there potential that these sectors that are were seeing this decline that they will rebound? These are the things you should ask yourself as a trader or investor. But it is this that creates opportunity for us to buy. Like I'll tell you that the big picture I'm seeing in this market right now is that the market as to speak is already in a decline phase. And a decline phase tells that it's either it will continue down to a level where it will get before it can now start a big support level. If you look at the market here at this point now, you can see the market at a strong level, support level now. But this chart is not enough. We want to see what the market goes to. That is why we want to see the heartbeat of the market. I told you that this morning at this hour, we are seeing that market is going up and down. It does not confirm an uptrend or a decline, just start trending now a little on a quiet mode. Now let me use that language. It does not make a breakout or in the down in the southward or rebound up now. I can see that this point, this place, you can see that this is strong, support level to watch. But you can see that market also corrected here at this level. The next day it rebounded and continued. Now it has gone to that level again and it slowed down. This one was seeing the market is flat, trying to turn green or red, waiting for a trigger, and this trigger will be on the strength of the numbers that we're expecting. Like I said, that the big picture of the market as we look at this market now or as we trade is for you that market has gone below the 54,000 mark, which is clear. But what does it suggest to investor or trader? These are two scenarios that we should expect from the market at this point. One, continuation of what on the downtrend. If the numbers we're expecting also come below market expectation, as you can see that if you look at the payout we have seen so far, only few companies have paid more than what they did in 2021. If that trend continues, if that trend of payment payouts continue, we might see the market pulling back. That's why you as an investor, you also know that you are in for dividend. But we that are others that are traders are waiting for this market to come back down a level and see the sector that has potential to rebound and start keying. And that is why, like I told them earlier, in the advert for the masterclass, that we are looking at those sectors that we know that have a world relative strength and compared to other sectors, and also has potential to rebound quickly. You are seeing any pullback in that sector now, we are already rejoicing because already part of the stock that we want to discuss in the masterclass have been selected. But we are still waiting on some key things to happen between now and Friday because the class is on Saturday. That will also guide us exactly what to do as an investor or trader. That's why I say you don't need to panic in the market. Once you have knowledge on what you are doing, you don't need to panic. Another, the second scenario is that yes, all eyes are on its earnings. I told you that the downtrend will continue if investors' expectation is contrary to what we are looking at, and the payout for this company remain below what they did in 2021. That is the first scenario. The second scenario is that if banks, stocks release or bank release their numbers and these numbers beat expectation or came as a surprise in terms of either their payout or the strength of the numbers. But because we have seen the banks Q1, Q2, Q3, we have seen that these banks are becoming strong on terms of on a quarterly basis. And also the only banks that have really audited account we have seen, which is Islamic, we have seen the impact of interest rates and also the bank and also lending, expanding their lending compared to what they did in 2021. How it has also supported their earnings. As we speak now, even though they pay 22 naira for that earnings, I think that the bank is more solid because they have the liquidity, they have everything it takes to remain with it. That means for me, most of the banks that we're expecting are going to look up in that direction. But payout is very key because all positions were taken now in banking, so we are seeing volume coming back in banking stocks. So yesterday, it's a result of what dividend expectation, and that is that people look at as yield are becoming attractive. Like what I said, one of the programs of Saturday on TV that the tension surrounding rate and yield is what is going to shape the market. And I believe that once we are seeing an attractive yield in this banking stock on a shorter period, we might see this position for income investor or dividend investor and also seeing the institutional investor coming back to take position in this banking stock again to increase their stake, because I'll tell you that would be the, a good return on a shorter time compared to any investing in what, in bond, or in what, in treasury bill as we speak. Like I said, that this week treasury bill options for tomorrow will also give an insight more to this tension between yield and what, and interest rate. Once this is settled, I'll tell you market also, and also like I said, the Q1 we're expecting also will be a potential. Say there are two scenarios in the market. Also, when market also adjust this kind of situation we're seeing now, after getting almost a 56,000 mark and pull back, market has gathered more strength to bounce back. And remember that because of pulling back, that strength was for the market to surpass the what, the 55,984 that it touched before pulling back to where it is now. For me, there's still very much hope in the market. There's no cause for anyone in the market also to panic as we speak now. Quick one, want to look at the two results that were released to the market late yesterday and early this morning. We're seeing some of them also too. Like I said, more of the close period for quarter results are hitting the market, but the result that came from multiverse mining and extraction and exploration, sorry, more multiverse mining and exploration, a few years ago that came. Here, this company, we have seen that they are not paying dividend, but if you look at the movement in the price, it moved as low as from below 1 naira to around 5 naira in 2022. And this year, if we are seeing this earning, if they sustain this number, the rebound of this stock is also very near. That's why I want to look at the performance and see inside to give us sense of the rebound. Then we'll now look at what is that technical doing, what is the fundamentals doing. The technical, we've already seen the fundamental. Is it what going in? Now they didn't pay dividend. I'm going to start paying dividend. These are the things I want to look at this stuff. This is their full year result for 2022. The revenue moved from 289.24 million to 602.33 million, about 180 above 100% in terms of growth in the change of return, which is very good. And also, if you look at the PAT, yes, I take that to look at the between the top line and the PAT. Yes, there's cost there, but because also that there's improvement in their top line, that also take care of that. At the end of the day, there has been a PAT of 189.76 million against 14.03 million in 2021. That is more than a thousand return in terms of change. It's a good one if this trend is sustained in the current financial year, since also December the year end. That means their first quarter, all eyes will be in the first quarter to see the performance of this company if this trend will be sustained. PAT, EPS, the 189.76 translated to 45 kobo earning per share against 3 kobo they posted in 2021. And I'll tell you that the profit margin also improved seriously, that was seen about 31.50% for profit margin against 4.85% in 2021. You can see that there's improvement, and this area of cost also is well managed. You can see, for me, that means in every 1 naira they made in this 602.33 million, that means about that 31 kobo is retained, which is good for a company in that. And also forget that into mining and exploration, which is also good. For the cash flow of this company, I'll tell you that they remain positive, and an improvement for that. The cash flow from operation is positive, strong at this compared to the previous year, 704.5 million against 61.7 million in 2021. This is an improvement that also look at. Like I told you that as you are looking at company results, always look at what the top line. And if you look at the balance sheet of this company, it's coming up good one. Balance sheet is okay. We have seen that the total assets and total liability will have still have a good retained earnings, and also we're also seeing that the what we call the shareholders fund is also in order. For me, every time we want able to take care of that, to come out with a good position for dividend in the future, able to wipe away all their past loss and then come back. That would be nice for the company. Then we look at the one that all eyes on. But immediately I saw the third quarter, I have an answer that these results for Cabri might not be too attractive. And yes, they might see some change there, but if you look at what is happening in Cabri, you need also have to be very careful. And don't forget that when there is inflation, consumers' purchasing power is bound to slow down. But if you look at the top line of Cabri, I'll tell you that yes, they beat inflation, but that does not translate into real position investor we're looking at. It's good that Cabri had a growth of almost 30% in their top line, because their top line moved from 42.37 billion in 2021 to 55.21 billion in 2022. Good one, 30.34% up. PAT also maintained a positive trend of almost 30%, 29.7% up, which almost 30% at the top line. To post 583.11 million against the 449.7 million. You can see, and this is about 27.7, like I said, 30% up, which is good. But if you look at this company, that the price of that touched almost as high as 17 naira, as we speak now, it's trading above 10 naira. The EPS, the 583 is translated to an EPS of what? Of 31 kobo against 24 kobo in 2020. So you can see that most time when you say company, what we call what they use the design, or trying to reposition their they say what they use in accounting to reshape their account system and all those stuff. You can see that this number, for me, is not too attractive in terms of supporting the price is selling. As a third quarter, this thing reflected, and I said it in the class, even in the premium class, that Cadbury results we have to be very careful, and we have seen it already here now that Cadbury earning per share stood at what 31 kobo against the 24. It stood at selling above 10, you can see, and the profit margin is very very poor. Profit margin about 1.05. The company that made about 55 55 billion, trading about those 500, to understand what has happened between them. And when you look at the retained earnings of Cadbury for the current financial year, it's a decline from about almost 11% to what it is today. The retained earnings, and now they are going to go back to the retained earnings to augment their earnings to pay the 40 kobo they have declared. Despite that, is also a decline from 50 kobo they paid in the previous year. That means for investors in this kind of situation, I believe that what you do, since that the numbers are not looking too attractive, you should understand that it is your money. If you are entering the stock to make 40 kobo, the stock that is above 10 naira for 40 kobo, and there are other stocks in the market that are giving 50 kobo, 30 kobo, that are far low, that your dividend yield is. But if you are income investor, you need to see where can you get better yield in terms of dividend, and that is where your eye should be. That means at this time, you look at stock that if you are selling off this stock at 10 naira, where can I get a better dividend at a lower price that is more than 40 kobo? These are the how to also look at. Then if you look at the cash flow from operation, has also turned negative in 2022 to 2.35 billion against 674.10 million in 2021. Yet if you go back to look at their net financing, we have investing and financing in cash flow. There might be a positive, but we have seen it on their financing cash flow. But for operating cash flow to be negative, you also have to also look and watch to see it turn. When soon it can turn around to become positive, so that it will support the top line, the earnings itself going to the future. Because I'll tell you, this is not a good news for me for Cadbury. It's not what the market are looking at, and that's why I can say this morning, nobody the market have not reacted to such number, because of what that is not what they are expecting from the company as to speak. That's why you as investor to keep your eyes open and also know what we are doing. Yes, back to the market now. The market, I said, is going up and down. Now market has turned slightly green again. Market is trading at 53,553.99, up by 3.22. No, that is about 0.001. Market is still very dicey, up and down. But the good thing is that we are seeing a positive market breadth. Even though the gain is switch flat, we are seeing 8 gainers against against the 6 losers. This is the position of the market now at this hour. Then the top losers are champs, followed by UACN. UACN, then we are seeing Japan Gold, Mutual Benefit, and Dangote Sugar. Dangote Sugar was adjusted yesterday, and this is the price now. This month has not rebounded. Then also, if you look at what is happening on the top line, on the positive side, we are seeing that PZ is leading the pack now, followed by Unity Bank, ICO, Regency Insurance, and Transcorp, are the one at the top at the speak. Yes, we have some banking stocks that are there, but they are not at the full time, that are still there because of people trying to take position ahead of the expected number. But for me, for Transcorp that have been approved, till now they've not removed. Investors are very also being careful in that kind of situation. After you approve your result, what is wrong? Is it that there's something that you are hiding not for people not to know, or what is going on? If nothing that is new in the market, I think if you have done well, reach your result. If not, because most time when you see a company in this kind of situation, it's only few occasions that when they come out, their result is still good. Most occasions when they come out, it's already what a bad result. So when you look at that have been consistent in terms of which market have already planned their time, but when they delay, it's signal, and at the end of the day, you saw what happened. These are the things investors should be learning from this market as we speak now. But in terms of volume activity is very, very key. As we speak now, transport is still leading in terms of volume, doing around 1.1 naira, 136 kobo, trading about 18 around 16.34 million shares, followed by Zenith Bank at 25 naira 10 kobo, then around 3.1 million shares as we speak now. Japo Gold 2.9 million shares traded so far. GT Code is also 24 naira 85 kobo, then around so 2.6 million shares, and Fidelity going stable at 5 naira 20 kobo, 2.6 also million share traded so far. These are the position of the market as we speak in terms of number. The quick one, I want to look at what is happening, looking at the chart. Looking at the chart, like I said earlier, if you look at the chart has already given us information what we're seeing. After we're seeing this market trend, we're seeing a kind of a pullback. Like I told you, that market is already on a decline. This is not a distribution phase. Market have confirmed a decline. We can see it here after starting here. At this point, market was at a distribution phase. Or I can see it now, it made a decline. Also started to kind of consolidate at this point before it finally gave up yesterday. But this morning we are seeing that market is turning green, red and green on just slightly here, and the volatility was still at this point, very low at this point. But let's keep our fingers crossed and watch the market. Like I said yesterday, and I quickly want to also let's look at the momentum in the market. Is there any changes? The momentum as to speak has gone bearish and also low, as to speak now. That momentum is very, very key. I want to confirm what the momentum is doing so that I want to use the two indicators that give us a clear so that you also understand when I say about momentum what I mean in that regard. That those that are joining us for the first time, but for those that are in this class, you understand by now, money flow is very, very important. Then we now look at our AD, our T line. This article, and I can see that the market is, the market is far, the index is far from what, from the T line. And when I told you that when you see the index action or price action far from the T line, either in the up direction or when it is far, it tends to come back and cross. And now that we are seeing this point now that the market is trading below the T line, even market have broken down the 50-day simple moving average and exponential as at yesterday on a daily chart. That tells you that market is on a downtrend. When you see market breaking down the 50-day moving average, both simple and exponential, market is on the way down. For this morning, I want to say that the market has, like I said, market morning flow has gone below 30. Yesterday so it's around 31.8. So this morning now it's already reading around 27. And also, like I told you in one of the last week, that when you look at this ADS now, which is a very good instrument to know the momentum in the market. I told you earlier that when market crossed here, you saw that the blue was above the red. All this while that is above the T line, it's also it remained above what the red one, and that continued. But when you saw that at this time I pulled back, it came up here, it came down, sorry, it came down here. But when the market rebounded, you see that it changed and continued in the uptrend and stable. For the first time that at the markets at this point, it was looking at market is already on a distribution phase, and there's already a divergence between the index action and what and the momentum indicators. But so that you saw that here it start coming down, so that it start coming down. Then now it two of them were at this point they were saturated before it finally gave up that the red chart, that is where the momentum become weak, and we're seeing now until you see this blue one crossing back again up, and that is where you see blue momentum. But actually at this point momentum is relatively weak in the market, waiting for a trigger, which is this number we're expecting not to do. But as we speak now, we have not seen these bank numbers to come. You can see also monthly, sorry, my money flow is also looking now at this point. Like for me, let's look at some stocks, that we expect to release their result, how they are doing, and also what we can do as well as investors at this point. What are those stocks that we're looking to see their number, especially from the banking sector, which I did yesterday again. But let's really look at what is their performance after the highly priced stock have put the market down. Is this bank following the trend of the market, or there's something going in for them at this as we speak that investors should also look at? Yes, as if you look at the daily chart for for ETT code, you can see where it is now slightly below the T line. And like I said, you can see that the same momentum has changed. It's now been trading a money flow below 50 points, which will tell you that it's relatively weak, but any possibility of turning back is very, very high, depending on the strength of the number they release and the payout of the bank. So quickly look at this annual in a 15 minutes chart. As I told you in this class, for those that are in this class, look at the continuing chart. It is trading slightly above the T line, and we are seeing that the two are moving in opposite direction. Nothing as to speak. But once you see the blue coming back to cross with the red up, that'll be a good position for you to look at. These are the simple way to look at the momentum in the market. Another one you want to look at Zenith Bank. These are the ones who are expecting to see the result. Zenith Bank, want to look at what is the, the trend here. Zenith Bank, you can see that as we speak now on a 15-minute chart, you can see that red, green, almost you can see, and you can see that the blue one is above. It's a good strength for the Zenith Bank. And money flow is already around 50, 74 on a 15-minute chart. We'll come back to see the daily chart for this stock. On the daily chart, it stays flat above the T line, and even when the candlestick formation support sign of weakness after going up, coming down, and that also you can see those things that it also have reflected on what on the momentum indicator I just now. You can see that the red and the blue are trying to cross. If there's a reversal here, that this blue cross up now, that's a good one. That's why you can see that this stock has remained above the T line, and once the blue one crossed up again, that is a fine one for me. It's a very good one. I see that here the red came up. Now if the blue can come up here now, and can see that money flow is looking up around 31, looking up good for Zenith Bank. For those that are Zenith Bank, don't need to panic. Quick one, look at Access Bank. So look at it yesterday. Look at Access Corp today. See what is happening in Access Corp, and Access Corp likely still be the last for our note for today. Access Corp here is slightly on a day chart below the T line, and you can see that the momentum is also weak here because it has been below the T line for a long time. Even once it tried to cross the T line and came down again, you can see from all this while it has been below the T line, try to come up and down on it again. I think all eyes also are still on Access Corp, their investment and all those stuff, and what is happening in Ghana. But let's keep our finger crossed and see this market results, how they're going to shape out the market and give a new direction and confidence in days to come, whether between now and 31st of March. On this note, I will say thank you for those that also taking advantage of the preparation for the class. You can also go ahead and make your payment. But for discount for the discount so far has been closed since on the 25th of March. For those that are still interested that are just knowing now, I think they are still making payment. That means if you have not made your payment, go ahead and also subscribe and be in that class, because I tell you it will be a class to work to remember. Because even as the market is doing this, a lot of stocks are coming to stay for, especially for we traders that we need to pay in. Not only because of dividend, we are seeing some momentum coming in, some information that we're also going to share that will support those those stocks to go up in the up direction, despite that the market is going down, and also as all eyes are what ahead of the incoming government to come with their policy. On this note, I say thank you. See you tomorrow. Bye.